review. Book 101 is all about the books that I read for the last 40 years. And today I have my special guest. He is the author of the book Making Money on the Money Printer. No other than Mr. Ivan Pavlovic.
Hi, Daniel.
Welcome to Book 101, Mr. Ivan. And can you please introduce more about yourself?
So I'm originally from Croatia, but I lived in different European countries, and at the moment I live in Portugal. Um, I studied law, but I started my career in finance, and through this I got interested in investing, and of course economics, which is related to investing. And so, um, having seen firsthand in all these European countries that same things are happening, I obviously understood that I had to educate myself better to understand for my personal financial situation what can I do to improve my well-being and that of my family. And then of course this led me down the road of discovery of economics, investing, monetary system, and banking. And so finally I decided to write a book about this topic.
Mr. Pavlovic, thank you so much for sharing your knowledge and wisdom to the world.
It's
Your
a pleasure.
title references the money printer, clearly pointing to central bank policies like what's the single most important distortion in the current system that beginners absolutely must understand.
I think the one of the definitely most important distortions in the system is also the one that is least understood of all, and that is the very concept of money and the money intervention. And so you are very right, Daniel, when you say that money printer points to the central banking and its role in the monetary system that we have. And the important thing that people need to understand is that uh, money is not something that is fixed. Money is just a tool that people use to exchange goods or services, but it can come about in different ways. And uh, as soon as we are a little bit grown up, so as soon as we are kids, we are being taught that we need to save money, and then normally our parents point to what we call today's currencies, such as Canadian or US dollar or euro, etc. And so we automatically perceive those pieces of paper, or in the modern era, also digits that are on our bank accounts, as money. But money really comes about naturally in free market, and we don't we didn't need the government to invent it. People invented it themselves through transacting, through bartering. And what money really was throughout thousands of years was just one of the commodities. And through time, it became a commodity that is at the same time most tradable, the hardest to produce, and that would serve as the best medium of exchange, along with having the function of a store of value. And so, throughout basically last 2,000 years or more, most trusted forms of money were gold and silver, as well as copper, which had a small role in it. And so, um, the governments then took the monopoly over money minting, and so they started coining money, and they mandated its use in modern era through legal tender laws. And so traditionally, then banks were institutions that operated in the money sector by, of course, playing a very important role in storing uh, uh, money and serving as a um, um, deposit institutions where you could safely store your savings, and potentially earn interest on them if you wanted the banks to lend that money further. So that's very important role for society that banks had traditionally, because banks had to be careful to whom they lended that money. And so um, people could on one side find institutions where they could safely put their money and keep it, store it for the future, but at the same time they could find an institution where they could say, okay, I will not use that money for another maybe 2 or 5 years or 30 years even. So if you want, you can lend this money further and bring me interest on it, but please be careful to whom you lend this money. And then, of course, banks were basically through this serving as important intermediaries in between savers and investors, because then entrepreneurs who needed this capital for their investments, the banks would lend this savings to them, and so through this the society could progress, right? And of
Yes.
course, the more the savings there were in the society and the more people wanted to save, the less the interest rate would be. So the interest rate was falling because the demand for money was falling in the economy, right? When you put your money on a savings account, that means that you don't need it, you're not using it, so the demand is falling. And so as there are more savings, the bank needs less savings on it to lend out, right? So that's why it's ready to pay less to the saver to have their money stored on the account, right? And so the interest rates then not naturally would tend to fall in a responsible society that saves money. However, um, we then had the different type of institution introduced to us through past few centuries in the form of central banks. And these institutions, what they really are what Murray Rothbard would call them, a banker's bank, because the government would provide a privileged position to the central bank, and through the laws it would oblige other banks to uh, basically store their deposits with the central bank. So just as you and me go to a normal bank, the commercial bank would go to the central bank to store their deposits. And so they all had to operate with the central bank's notes and with basically their reserves, so that they can use these notes and give them to the citizens. And citizens needed then those notes because they were obligated by the legal tenders to use them further in the commerce, right, in trade with each other. And so basically what this means is that these institutions were given privileged position of issuing notes from thin air, and that all the banks had to basically do business with it, right? And so this is why they are basically essential to the modern monetary system um, and its role in society.
Very well said, Mr. Ivan. Very well said. Thank you for your empowering answer. How does money printer affect differently distort various asset classes like stocks, bonds, or real estate, or crypto, or commodities that beginners should be aware of?
So having said what these entities are and what role they play in the system generally, what we need to then understand is that um, as the banks can create money out of thin air, uh, this then increases the money supply. And so if there is more money circulating around on the bank accounts of the people, right, because the people will then store it in their savings accounts. What did I say a minute ago when I spoke about savings? So if there is more money on the savings account, that there appears to be more savings, right? So that means that the interest rate will go down. And so basically, throughout the increase of money supply, once the banks are able to expand more money supply through issuing credit, and they do this a lot in today's modern system through fractional reserve banking, meaning that the banks need to have only fraction of total reserves on their deposit. So if I leave $100 in a bank, the bank maybe needs to keep only $10 of my $100, and then lend it out. They can lend out $90 further, right? So that's fractional reserve banking. So when banks engage in credit expansion, so when they issue more credits and loans, they create more money, and so that results in interest rates falling. Similarly, if the central bank is buying securities in the open market, so for example, government securities, government bonds, they are creating artificial demand on those bonds, because the bonds are not sold to the public. The bonds are sold to the banking system, which buys it because of central banks intervention. And so that creates demand on the bonds, which then in turn lowers interest rates, because the higher the demand on bonds, the lower the interest rate, and vice versa. And so this is how the system gets distorted, um, because it appears that there are more savings than there really are in the society. So because of that lower interest rate, and because of the appearance of more savings, the entrepreneurs then start more projects that there should not be started, because in reality there are not enough savings for all these projects to be completed. And so that's the big distortion. But then there are a lot of others, of course, second order effects, uh, because once the price of money, the interest rate, is being manipulated, then also other rates are manipulated or distorted as a consequence of this first distortion. So basically, you're more when you want to um, borrow money to buy a house or a car, so the interest rate on your mortgage will then be different than it otherwise would be in a free market, had there not been central banks intervention, for example, in buying government bonds. And so what we just need to understand is that all these prices then get distorted, and those distortions ultimately result later in a certain type of crisis. So it can be a recessionary crisis, when the new liquidity, new influx of money, influx of new money stops, because then you have basically bankruptcies and not enough new loans to cover for the projects that are actually not productive. Or you can have a continuing expansion of credit if the central banks and politicians intervene further to pump more money and then extend more credit to the businesses that are in trouble, to prolong their life. And so, what then, of course, this does is that it only again disrupts the whole balance in the markets. It further lowers interest rates. It makes assets rise in value typically, so that's why our homes and cars get more expensive. That's why bonds or real estate go or stocks go up in price, because simply because there is more currency units in the economy chasing all this limited supply of goods. And so uh, eventually it results in a lower standard of living of everyone.
What are the most accessible and practical hedging techniques, if any, you recommend for beginners to protect against systemic risk stemming for monetary distortion?
When I first started writing this book, of course my focus was on inflation, and then I thought about simply speaking generally about that people should think about hard assets and other things. But then it eventually became clear to me that um, this is not that this is not the only thing that needs to be emphasized. And I think this is something that everybody just needs to be very aware of, because uh, all the whole banking system and the whole inflationary aspects of it are not necessarily one-way street. And so this is why there is no one safe investment that can, protect people from the consequences. It's precisely because the system itself is so fragile, and one at one moment the assets can go up in price because there is confidence, and there is of course a mentality of speculation that develops, and then in another moment you can have markets falling because of course other factors that can happen in the economy, such as politics, geopolitics, wars, or others, supply chain disruptions that can affect confidence of the investors. And then because of this you can have these ups and downs that are maybe short term, but nevertheless they need to be taken into consideration. So I in my book I'm describing the business cycle as described by the Austrian economics, and basically how it is triggered, what it means for the overall economy, why does the whole economy suddenly slip into a recession even in good times, even if the times are normal. How can it be that all these entrepreneurs then are wrong, and suddenly there is a realization that all these projects are not um, profitable. And so this is where we see the consequences of the manipulation of price and money. And of course, if the whole economy is going down, then normally assets tend to follow, right, as the confidence crashes. And we see this in different in different crises, especially those in, I would say, this century. It was very visible in 2007, 2008, once the markets went down as investors lost confidence. Um, we've seen it then in Europe as well, that there was sovereign debt crisis a bit after that. We've seen it recently also during uh, COVID surge. So basically, once there were government measures and lockdowns and everything. So once this all started to happen, people became very afraid. Markets froze, liquidity froze, banks stopped lending, and so you saw very quickly how the markets went down. And so it is the point of my book is really to portray to readers that they need to be mindful that the assets are being blown up basically with this additional pumping of this additional money, but because of that they can also go down if there is, for example, short-term panic, or there is uncontrollable overall collapse of the system as well. So I think that the most important thing about hedging in general is to be aware of the risks. And of course, we cannot be aware of all the risks that are out there, but we can try to prevent risks through diversification in different asset classes, in different geographical um, assets. So that means that you don't have to invest everything in one market, in one type of asset, right? There are different assets, different markets, and there are some strategies that you can, of course, use depending on what you predict where things will go as a general trend.
Very well said, Mr. Ivan. Very well said. As an author of Making Money, what are your short term and long term goals?
Since I've just published a book recently, I'm simply trying to spread the ideas and promote it. It was not originally my intention to write a book. I was simply an explorer, a researcher in this field. Again, for years, I've been listening to a lot of podcasts, reading a lot of books and articles, etc. And one thing that became clear to me was that um, I think that there are some of course, a lot of good sources, resources out there, but usually they tend to focus on only one thing, and so you have to read many books on different topics to get even the basics around those topics. So what I wanted, so for example, there are books that are very good, who in a great way they explain what money is, and also its relation to markets and central banks. But for example, those books then don't explain what happens in general when there are no uh, central banks, on where there is no disruption of money. So what how the world would look like in economic sense, if we wouldn't have that. So I included that, for example, just as a first chapter, to explain a bit about, generally how interest rates, what the price of money is, and how it behaves, and how we actually prosper as a society if we have sound money through improvements in technology, right? And then there are some other excellent books or articles that explain debt cycles, and debt cycles are important to understand because inflation is basically related to these debt cycles, because the authorities usually try to fix the consequences of that through inflation, right? And then there are some books that explain very well the crisis of 2008, for example. But then, they would not. I would have to separately read about this if I wanted to somewhere. So I wanted to connect all these different books into one topic, and of course in relatively simple and easy way to understand, to write it all together in one piece. So short-term goal is, as an author, I guess, is to spread the ideas, and the long-term goal is also educate myself even more on these topics, and hopefully someday maybe write even better book about this.
Good luck to your goals, Mr. Ivan, and hoping and looking forward for more success. What would be your piece of advice for those people out there who want to be an author too?
Thank you very much, Daniel. And my advice would be, I guess, don't be afraid to give it a go. Don't be afraid to try, because what I can tell you is that I'm not some Shakespeare. I'm not, super gifted with words or anything like that. And also, English is not my native language. Obviously, I'm from Croatia originally, so Croatian is my native language. I lived there until the age of 25. Um, and so English is my second language, working language. So I decided to write a book in English about topic where I'm self-educated on, money, economics, and investing. And uh, once you start doing it, if you feel like you should do it, if you could do it, um, I think you will discover, as you write the book, you will discover progress even on yourself. You will discover that you maybe don't understand certain topic as deeply as you thought you do, so you might need to do some additional research on it. And then once you've done it and you make this chapter better, then you are actually very, happy about it, and you're more proud of yourself and the work you've done. And another thing that I can say also is that I didn't fully know how the book will look like when I decided to write it. So writing took me about 2 years, and I I just had the idea in general about what topic would be, and what would be more or less different chapters, but I didn't know exactly what I will write about in these chapters. And so it is very interesting, I think, as an author, to see how the path in front of you uncovers as you go through it. And so the book has also its own way of life once you start this path. And so finally, maybe there might be some other books, maybe, or experiences that you will live through, that you will then put in the book, and these will give to the book maybe a special touch, a different meaning that you originally that you originally had in mind. So I would definitely encourage anyone who is thinking about trying to write a book to give it a go. You cannot lose anything, and you will definitely learn something new, if nothing else.
Definitely, and thank you for your advice, Mr. Ivan. And before we wrap up our discussion for today, I'm inviting you to please do listen to my other podcast, people. My other podcast, because my abstract essay is already in fifth season, abstract poetry in second season, and of course my book 101 review in fifth season too, comedy 101 in second season, and food 101 in its fifth season as well, geography 101 in fourth season, and my baby podcast Law 101 and Mental Health 101, Love Letters in third season, and Movie 101 Review and Music 101 in fourth season, and Science 101 and Sex 101 in the first season. Please listen to them wherever you listen your podcast. Mr. Ivan, if a reader finishes your book and wants to take just one immediate concrete action to align their investing with your distorted system framework, what would it be?
I guess the most important lesson, and this is something that I took also from Rich Dad Poor Dad book, which was one of the first books that I ever read from Robert Kiyosaki, is to educate yourself. And if you educate yourself, you will be bulletproof to different noise, fake news, and other things that you will encounter inevitably, not only as an investor but on a daily basis as a uh, just as a citizen of any country. And so you will be able to see through some lies that are being told to us, and at the same time you will also not make some mistakes, and you will not rush to make some um, uh, actions that are probably not well thought through, if you have a deep understanding of how markets work, how money system works, how it is structured, and also a bit about understanding yourself and investing psychology, and how markets can behave, especially in inflationary or stagflationary times. So that's why I would encourage to everyone to educate yourself. And I wrote this book specifically for beginners in mind. This is not just a general book about investing. It's a book in investing in a distorted financial system that is distorted by the money printer. And so the book is available on Amazon for everyone who is interested.
Mr. Ivan Pavlovic, thank you so much for sharing your knowledge and wisdom to the world, and
Thank you very much,
hoping
Daniel, for
and
inviting me.
hoping, yes, and hoping for more and more and more empowering books like this to come. Keep up the good work and let's empower people all over the world through your knowledge and wisdom. So, can you please invite our listeners to support your debut book?
So I invite everyone to again read the book on Amazon, Making Money on the Money Printer. And if you want to get in touch with me, you can find me on LinkedIn under the name Ivan Pavlovic. I live in Portugal again, or even on Twitter. So there I'm on ivann.pvl. So if you want, I'll be happy to speak to you.
Yes, people, let's support Mr. Ivan Pavlovic, because if you support him, more and more and more empowering books like this to come to empower us about money, money, money. Mr. Ivan, thank you so much for your time.
Thank you very much, Daniel.
Modicon people, see you soon.